Right. Let's do a share screen. Okay, let's crack on through these questions. Thanks everyone for being so patient. Sorry, I didn't realize where they've been put, so that's my fault. Hopefully you can still see me, hear me. It should be fine. And if you watch through the video, it's fine, but I'll work through the questions. There's not that many actually today. Well, this might be quicker than normal. So, but okay, let's go for it. And we're on time as well. Check it out. I've just been nothing but either doing videos today or on a Zoom consulting. So I feel like a busman's holiday this is today. Right. We've had a preview of what happens to farming in a bear market. Funds will get negative on almost everything. Yield will drop on a lot of pools. Looking forward, beside lending dollars or stables, do you think Delta One strategies will be viable in the mid to long term, 3 to 5 years? This is probably, I'm assuming this is going to end up becoming a repeating question, but yeah, absolutely. This is what I'm spending time talking about in consultancy sessions. This is what I'm spending time looking at. There's no getting away that the kind of dizzy heights of 2,000% APR in pools is likely to be over. the concern, not concern, but it just requires a little bit more guile and skill to find the yield. But the reality of it is you can still adequately find 20 to 40% really, really stable yield. I have noticed there's now a reluctance to release the perps. So you must be seeing the same things. You know, I don't think FTX have released a new perp now for a while. Everyone knows that we have become the destroyer of worlds, and I don't say that lightly, but the size of the people that are involved in the farming yield hunting space is way more than the average punter long in some crypto and begging for it to moon. So we have become, you only have to bring out any chart of any contract that has a perp on it, and we've pretty much butchered it. So I think there is plenty of opportunity out there. It requires a little bit more hunting, a little bit more skill, but 100, 200%, I'm not seeing that anymore. Am I seeing 30, 40%? I mean, that's still insane. We use the meme only. It's still a massive number. So I'm still really bullish on the space. I just think if I was a betting man, I'd say we've got some changes in the stable coins coming, which I've been preaching about since forever. And I think there's going to be some changing of what coins are given perps, because there's already a noticeable difference of the impact we have on the market when there's no perp, because we don't play. No perp, no play. So that's that I'm seeing. Right. Review of the 5 videos and which DeFi actions are currently the most profitable. Currently the most profitable is, still a variance of, step funding is lower. I could have said that Ray's doing pretty well. Sol's cheap at the moment. They'll still get you your 30 or 40%. Brief overview of what Adam himself is currently invested in and why. I'm predominantly at the moment in Terra. Why? Stability of yield. What development should we prepare for, and what will be the next alpha? I think there's a whole bunch of things. I think there's a lot of tokenized stock changes that are coming, and I love how low they are to be funded. Thanks for QA. Pools and perma-perp strategies are very advantageous in bull markets. However, opportunities in the last 2 months have been limited. Do you recommend doing these under these conditions? Stable lending, other blockchain opportunities? Yeah, I mean, we're seeing a theme here as everyone's we've really smashed it to pieces with what we're doing, and it's noticeable now that people are seeing much lower yields. There any opportunities where I can kind of avoid a perp, so pure stablecoin plays, stablecoin pools, stablecoin staking. That's been where I've been slowly moving things to, and some tokenized stock plays as well, where I don't need the perp and I'm not subject to. One of the good things about some of the stable coins, the tokenized stocks, is you can't be pulled apart with the randomness of the perp. So because the reality is, if FTX come out of line and what they're lending, you can just flip and do the opposite in your Robinhood, in your IBKR, Interactive Broker, whatever you want. They can't dominate us. So that's a really interesting thing for me at the moment, because the perp provider is so big as a percentage of volume and a percentage of market control in the shit coins, that we're victims of this. And so for me, I've just found that find things that they can't control. So the tokenized stocks is interesting. I did not yet understand the 5th video at all. Can you explain again for a 10-year-old what's it all about and why does it make sense? Why does it make sense with smaller amounts? And we talked about Deribit in the 5th video. Deribit as a 5th video, maybe, I don't know yet, because I just think there's too much complexity in the strategy, and I don't want people to be losing their shirt because they don't understand hedging. The fact that loads of this part here, that so many people do not understand the gentleness required for getting in and out of a position, tells me not to do the Deribit video. So it's only, the last thing I want is people getting hurt or losing money. So you saw I didn't get involved in all the Polygon stuff because it just worries me. This, though, don't like that chain, all the iron stuff. But there's definitely a disconnect between the old market guys that understand how an order's worked, and you moved between 2 contracts, and people that are new or don't understand that space. So Deribit is very much that. If it happens, it will be, come with a big warning. Must understand the order book. But to answer the question, what it's all about and what makes sense with the smaller account. Yeah. So you just, it's. Oh shit! Actually, I wondered if I had Quant Tower up, but you see all the spikiness that goes on in Step. It's just people hitting market orders. It's just, you carve an order up into smaller areas to fulfill the order into small pieces. Otherwise, you just get trapped. That you're working on one lumpy order. It's just a little bit of finesse to the order. So if you've got 100,000 step to do, break it up into 5K blocks, bid up one side, push down the other. When you get out of a position, you've got a massive short position in the perp and a shit ton of the crypto. That's what gets. So you transfer it all from your Phantom wallet into FTX. Massive short, shit ton of shit. You've got to sell the crypto, and you've got to buy back the perp. Well, you use the power of each of them to create your own market. So as you push up as you push up the perp by being short, you then sell into a more advantageous bid on your token. You balance them out and you work it slowly to ease up the order. You don't just hit market order. You're just giving money to Alameda Research. Literally, you may as well take out $1,000 and just give it to them. Next one. So thanks for the Q&A. Wants to ask whether controlling the order book, how you approach it in the market trending. So that's the first question, which is here. These shit coins just don't move. I think there's a lot of fear unnecessarily in them. They're not going to suddenly blast away from you. I can pretty much, every time I'm in and out, I can turn $500,000 within 30 minutes. There's nothing that's going to change these coins. There's, find a quiet time, no Bitcoin news, but in general, they're agnostic to everything else that's going on. How to approach when the market, I wait for a fairly mundane piece of time and just compress one, compress the other, and wait for them just to start filling each other. And it's I guess I'm quite blasé about it, because I guess that's been what I've done all my life. And some people, it's new and scary. Just take a look at any of these coins. They don't trade. We are the dominant force in them, because we've got all the perp position where we've ended up becoming the dominant force. I mean, I joke about it. We are the killer of worlds, and we are. So I just think people need to just be less concerned. Risk is when you are taken out on one side, no opportunity to get off the other side of a decent spread. You wait for a calm period. I mean, I just wouldn't. I've done it 15, 20 times now, and I've not had someone lift the whole of one side. It just hasn't happened. And whenever you see these little spikes that you see on the chart, look at the volume that goes through it. There's just no volume. It's just, there's guys that are leaving orders 5% away in the market all day long. I know one of them in Australia. He leaves an order 5% at the top, 5% at the bottom, and he waits for everyone to put stupid orders in and becomes the other side, taking 10% each day. So, would I do that in these things in Sol? No way. When I'm doing these, just keep it to the absolute shit coins. The ones. Can you talk about your Terra play on Mirror? Are you short MS Asset from Long Farm? There's a video coming out on this very soon. Won't be. It's different because it's purely on tokenized stocks. But just, are you short the M Asset farm and long the farm pool? I'm mainly short the farm pool, long the asset on FTX. To give you a very quick summary. Thoughts on CRV? Will you be sharing a CRV play with post to the Twitter poll group? Yeah, can you also? Yeah, so the curve play, yes, but the reality of the curve play is that the bottom line is it's 15% per year, and I haven't bothered really putting it up because I don't really know if people are that excited about. Basically, it's a really simple. It's just managing the stable pools via curve and then moving. I've moved probably 500,000 onto Ethereum mainnet, and the fees even at that amount still make me just think it's just ridiculous. But it's safe. It's in a huge pool, and the fee collection is very, very accurate. And so yeah, I mean, you're probably sensing from my tone, I'm diversifying into much less risk everywhere, like stable coin pools, moving to Terra, tokenized stocks. I've looked anything where I can hedge less. So some of the plays I'm doing now where it's actually the hedge is quite fixed, and I'm quite comfortable with that. The variability of IL as these tokens on Solana, as an example, have all moved down into the shit zone. The rate of change as a percentage of the asset price concerns me with anything over $50,000. So if you're under that, you don't notice so much the intricacies of what's going on. But you suddenly, you go above. I've got friends outside of the markets that have got a couple of 100,000 in step still, and they'll blink and pick up 5,000 step, and then blink again, and there's 5,000 step gone the other way, and that's the IL based on the rate of change, which is concerning. So I'm just slowly moving my assets into the stable plays at the moment. Oh, King Kong 86 was brings us on nicely. How are you allocating your capital between Step Media? Step Media for me, like there's probably 200,000 here in Step. Media nearly out. I think Media isn't. I checked, Media is like sub 90% now. Yeah, 93.6%. You start to take the perp off that, and you just kind of think, what's the point? Kyber DMM, not huge. because I quite like the stable coin, but it's not huge, like percentage wise, tiny, but $40,000. Terra, a lot. Any other yield farming pools or perps that you are in currently? Just predominantly Terra, a fair amount in Mercurial, but it's not performing very well. So I don't know if anyone's gone in that yet. Until they start issuing the Mercurial rewards, it's a bit of a, dog with fleas. The SLRS looks like Sam's not going to issue a perp, and you can already see the APR falling of that 100% an hour. So I think that's a bit of a dead duck. And really just looking at some Ethereum plays. That's it for that. Specifically to Terra, how do you go about choosing which M asset to go long or short? Do you go for the highest APRS, which is more volatile? No, I tend to look for, again, in this, because you don't have so much IL variability, especially with how you can structure some of the parts on Anchor. I don't really look for the highest vol. If anything, I do an analysis of the stock with the current lowest volatility, and then look at the short pool that's got the best return. Outside of farming, we know trend works in crypto. What are the trading strategies do you think it might be worth researching, scalping, mean reversion? So it's a good question, that. Right, let's break it all up. Scalping. The problem with scalping, from my rudimentary views of crypto compared to centralized markets, or things like futures, is it's confirmation time of the transaction is very, very slow, so you can get dropped and hung. So the decentral, the kind of this weird phase of decentralization where the decentralization's occurred, but the issue with it is that there's been no latency realignment. It's just lumpy everywhere. You go to KuCoin example, it pings to me at 1.5 seconds. And then I look at Deribit pinging at 4 milliseconds, then FTX. So you've got loads of variability, and then you've got loads of confirmation change between all the order managements. I think scalping 20 trades a day, you could probably, do that in the major coins. But when I'm calling about maybe like 5,000 trades a day, like proper, really assessing the scalping from an aggressive, toxic mechanism. Mean reversion, potentially I struggle with mean reversion in crypto at the moment, but maybe because I'm on a bit of a downer with the fact that there's wrong words. There's a lot of people had to realign the amount of money that they've got collateralized because of the fall in Bitcoin and Ethereum, which is what's putting pressure on DeFi downstream. Mean reversion for that could be a self-fulfilling spiral to the bottom. Volatility from a skew perspective, yeah. Stat arb, options. I do believe I have an options play, but again, 25-30% a year, which only. But this could be interesting. But I think that all of these things are open. I think what we might be suffering from, putting my kind of ethereal mindset on, is we might be suffering a little bit from the over decentralization of the crypto space at the moment. We could actually do with a little bit of centralized cross booking, just to make it a bit more attractive to what I would call the trading pro, not full toxic, not the likes of Almira Research that are well spanned and enjoying it. It's become one person, maybe two, enjoying all of the rewards and the rest getting clipped. Any AMMs outside your Raydium you think are worth researching? No, not at the moment. What's your largest risk you look to manage? Counterparty risk, tether risk, stablecoin risk from UST, counterparty risk. I guess FTX, but the reality of it is that they're doing well and raising money. Tether risk, yeah, but we found a way of hedging that. Operational security, I do the best with those stuff. It's just, yeah, I think dispersion across so much is the best thing to do. How do you manage this risk? Multiple counterparties, yes. Sell, yeah, futures, hardware wallets, VPNs, all the usual shit. It's just the same. We're doing all the best we can in the function of it all. What are the other main income What are your main income sources? Macro hedge, subscriptions, advisory, fund management, crypto trading. What was the percentage of each? So advisory. So my main income stream, well, my main income stream is predominantly right now. It's bigger than anything else. Is my DeFi income for trading DeFi. Then it will be the income from trading my personal assets on futures and options. Then the income from the fund. Yeah, macro hedge is not really, whilst it's big and it looks big, there's a lot of costs associated with it, and there's always new businesses going in, and it becomes a bit of an investment pot for me of just, there's staff, there's development, the time. It's more about creating a community. If it washes its face, then that's good. It's not that that's a bad thing, but it's not my primary source. It's kind of a bill payer. What's a rough percentage of each? Right now, I'd say more than 70% comes from DeFi, even with the changes. Do you foresee your income profile changing over the coming years? Well, always will. Specifically in relation to yield farming, have you seen drops in APR like this before? Well, the thing is, this is new, isn't it? I mean, so the chaos. I mean, we had the whole sushi 10,000% shit, but this this drop is a significant drop. But we all smashed the absolute crap out of it. Part of my French is, we were all up to our absolute necks, because I personally didn't want to get to the point where I would, be in a pub in 10 years' time and people talk about, oh, do you remember when you could make 2,000%? And we killed it for 6 weeks, and someone sat at the edge of the pub who decided to not do it. I didn't want to be that person. So yeah, but of course we killed it. I mean, it's just you look at radium now, which I'm looking at, and it just looks sorrowful in its current state. Assuming it's cyclical, how you've navigated this previously with regards to the opportunities? Well, it's hard to say it's cyclical when it's so new in the space, but I'm certainly there's opportunity around the merging of the DeFi space with tokenization. Are you aware of any borrowing markets for coins and tokens that you see a viable way to resource allocate? No, not at the moment. Nothing you boys don't know about. Can you do a walkthrough of allocating on Terra as you did for SOP? There's a video coming, but it's not part of the normal videos because it's purely focused on tokenized stocks. I will do a video for you DeFi degens, but this is a purely tokenized stock. Besides, do your own research. What should a newbie monitor to get out soon enough if it gets ugly? I think this is a really interesting question because the interesting thing for me is it's the wrong way of looking at it. Getting out, plan getting in right. That's the concern, that everyone just sees 2% a day, iron or whatever that chaos was, and balls deep. And I do a lot of pulling it all back. I've in the thing I've made a video today, and it's half the videos on getting it all back and having that process and making sure that for me it's not necessarily like make sure you've done your research to get in the first place, but make sure you've got your exit strategy. But it's the same as having an exit strategy for any other market as well. So I think that's an important factor. Sorry, I'm just looking up at them markets. When it walk one on Terra walkthrough, yeah, okay, but when entering perp, what's more important? Shortening the time between opening positions in the perp, and ensure you open at the correct price both orders. There's a lot of people worrying too much about that. I'm struggling to get filled on both limit orders in a short space. Sometimes I see spot filled, but perp short orders sitting there for a long time. You're always going to lock in a loss because you've got a there's a spread between the there's a spread between the spot and the perp, which has been a step we can talk about as an example, which has been sitting there. I think people kind of see the perp, the price they're in at the perp, and the price they're in at the spot. You got to remember is when you got in, you had that benefit. When you get out, you've got that loss. So when you got in, you had that loss, and then when you get out, you had that benefit. So I just get out. It's not the primary objective. It's just, get out. Should you always get filled in your long spot first? No, it varies for me. I'll just drive up the price until one starts trading, drive down the price until the other one starts trading. Genuinely, I would just do that. I mean, it's just, I'm going to load it up now. Oh, I'm on a different share screen. Sorry. Oh shit, it's going to come over everything now. I will do another video on this because I think it's causing a lot of confusion. I'm surprised it's caused so much confusion because you're all having to do it, but I'll even do it in a small amount. So I think sometimes people might see doing it in massive chunks and thinking, well, that's creating domination of the market anyway. So you're going to control what you're doing. Whereas I think if I try and do it in a smaller amount for everyone, they'll start to see that you don't need to worry about kind of so much of an issue. Where are we? How do you decide which side of the market to work first? I literally drive up or drive down and see which one starts trading. I really do not worry. Don't stress it that much. I'm just, oh shit, hold on. I just logged into the, I'll do a video and I'll just do it with like $5,000 and I'll make a really quick video for you guys and just share it into the room. But I don't, honestly, if I've got spot to go, start driving down the spot. If I've got perp to buy, start driving up the perp. They will meet in the middle and they'll just start trading. Question answer today, what would you do if you only had 1,000 to invest? What would I do if I only had $1,000 to invest? For me right now, I think the best plays are, I would say the best opportunities still. I mean, if it's just that, it's such a difficult one. So is it $1,000 that's your last $1,000 and you're just going to roll the dice? In which case, find yourself a degen pool. If it's $1,000 where you just got to have a stable income, I mean, the Sol USDC pool, will still make 30%. You can flip over to UST Terra and, you get yourself 32% without needing any hedging. So I'd do that. Do you manage outside money for your DeFi strategies? No. What's your prediction for the England match tomorrow? I think we'll win. Maybe 2-0. There we are. I think that's it, isn't it? That was it. Right, I will do the video on the order flow because I think it's causing some confusion.